Hey there, it's Ben from patternprofits.net. I wanted to bring you a quick kind of tutorial on the put call ratio, CPC. You hear me reference it a lot. We're looking at the total put call ratio here on a weekly chart. As you can see, the close on Friday was the highest level we've seen this year. I've used this for many, many years throughout my career as a contrarian indicator for sentiment. As you see here, what we often get are these spikes in the put call ratio. Going back here pre-QE days, 1.2 used to be the level that I'd really watch for. You see these spikes above 1.2. This up above here is the S&P. This is price performance of the S&P. And you can see how we get these spikes in the put call ratio, and shortly after we get the bottom. Sometimes it's even on or very, very close to the same day. And then we get these runs. Since QE started back here in March, we've only a couple times closed above the 1.0 level. And I think that does have something to do with the QE and the fact that the Fed is printing so much. We don't see these extreme readings, but we still do get spikes compared to what's been kind of average between this like 0.73, let's say, and 0.9. That tends to be the standard range. And then it's when we get the spikes outside of that range when you want to pay attention. So I prefer CPC, which is a total. A lot of people do like to use CPCE, which is the equity side of the equation. And when we're referring to the equity side, we're taking the index options and the hedging that the big institutions and that maybe we're taking that out of the equation, and this is more just the retail crowd and how they're leaning. And as you see, this was a rather large spike on Friday, largest one of the year, and largest one we've seen since late last year, where we hit 0.77, but 0.69, a good strong indication that the retail crowd is leaning quite bearish here. And as you see in the past, these spikes have led to intermediate term bottoms and then nice rallies. I'm not a huge fan of the index side of it, CPCI, because there are so many other variables in play here. A lot of hedging of the big institutions, hedge fund stuff come in. You don't see quite the same type of response with these spikes. The correlation isn't as strong here with the CPCI as compared to the CPC or the CPCE. I also, and you've seen me reference it before, the McClellan oscillator. I like to combine. I don't think the put call ratio, whether it's CPC or CPCE, on its own gives nearly as much value as combining that with the actual price action that takes place, as well as using whether it's a summation index or the McClellan oscillator to also help point out those overbought and oversold areas. You saw significant oversold here, and we're kind of getting there as far as the current readings. This is one of the lowest readings for the McClellan oscillator that we've had this year. I still think there could be plenty of more work to do here. We can still see this go lower, and we could still see the put call ratio go higher before we get a significant intermediate term bottom in the S&P. But I do feel like we're working in the right direction. So using the combination of the put call ratio or the equity side, combine that with, like I said, the McClellan oscillator or summation index, and then confirmation from price itself, because CPC or CPC alone is not usually going to give you a valid signal, at least not when you want it. But when you combine that and know that we're getting into those contrarian numbers above 1.0, between 1.0 and 1.2, let's say, and then you watch for price action to make that turn, whether you're looking for a capitulation type movement like we saw back here and back here in the S&P, or if you're just looking for that to reclaim maybe the 8 EMA or the 10 MA or the 20 MA, whatever your time frame is. You want to match up these readings. Just because 1.2 hits in the middle of the day, I don't think I'd load up on the long side there. You want to see price confirm any reading that you may get in the put-call ratio. So I hope this helps. I'm constantly sharing this info in real time on FinTwit when we are in the middle of a pullback and looking for a bottom and a bounce. Hope you guys enjoy the rest of your weekend, and I will see you over on FinTwit.